markets transition from high resistance to low resistance. Where does it occur today? What time of day do we focus on? The silver bullet. So it's a time-specific window of opportunity that the algorithm will present to traders that are aware, that are looking for it. You just can't go out there and say, oh, here's a fair value gap, so let's look at that and trade it. That's the context or the multiplier used in the silver bullet trade. What was the bias? Higher. What was I calling for as a target? 41.38 and 3/4 and maybe 41.40 and a half. So my bias intraday for the AM session was bullish. In between was consequent encouragement, which is 41.38 and 0.75. While it was meandering around here, going sideways, I referred to that initial fair value gap on Monday, explaining how it's drawn through the entire week, much like I teach the opening price on Sunday. If you drag that through all of the week, it will treat it as fair value. It's also helpful for trading positions, long-term positions, because you can, if you're looking to be long, you want to ideally try to get something long below that opening price that opens on Sunday. It matters not how deep below, but your best case long-term swing trading, in other words, like trades that go longer than 2 weeks into months, if you will, they are better entered if you're bullish below the opening price on Sunday, or if you're bearish above the opening price on Sunday. It's not limited to that, but the best, if you go back and look at your old moves and such on a longer time frame, you'll see that's true. But I drew out your attention to the bullish breaker, which is the blue shaded area here, but we'll go to a 5-minute chart because that's where it started from. So here's your bullish breaker, and I mentioned this Monday fair value gap. Is it hard to see how we've accumulated in both those areas? Where did the market transition from high resistance liquidity to low resistance liquidity runs? Let's go back down to 1. What do you see? Right there. That is your silver bullet. Where's the draw on liquidity? This high. But if it's going to go above this high, Michael, where can it go? Well, that's what I have the new week opening gap there for. So what level above this high exists? The initial one right above that high would be what? Consequent encroachment, which is the midpoint between the high of the old new week opening gap and the low of this new week opening gap. So above this high, the level was 41.38.75, which is midpoint or 50%. That gives you the target above buy side. So if you're buying inside the fair value gap here, and we'll just do a worst case scenario, so we'll do like the midpoint, 41.33 and a half, so 41.33 and 3/4. There's 5 handles. So while all this choppiness was going on, for your notes, this is called time distortion. The context was we've already went from this fair value gap over here. Let's go back up to a 5-minute chart. So the fair value gap here, we had, lost my train of thought. I'm not sure what I was going to say there now. Let me go back to the 1-minute chart. It'll probably jog my memory. Yeah, time distortion. So all of these candles in here, this is time distortion. But if we go back to the 5-minute chart where everything originated from, our frame of mind and focus was, yes, we have this fair value gap. Yes, it dropped down into a discount, as we would expect it to do, into a bullish breaker, which is a discount array. How far could it go down to the low of that candle right here? Why isn't this the breaker? Because the body of the candle of this one is higher than the body of that candle. Even though this high here, I don't care about that. The volume inside that candle dictated that it would be closing here. The wicks do the damage. The bodies tell the story. You can't just go, well, this looks like a breaker. No, you have to grab the right range. And I'm giving you and teaching you and have already taught how to identify the specific order block. How you use these order blocks, that's experience. You have to be mentored by me. You have to see me doing it. You just can't say every down close candle is an order block. Just like I'm going to show you every fair value gap isn't something to be traded. You have to have an understanding of narrative. Narrative is knowing what the algorithm will do based on its source coding. Not that this is what a pattern should show. It's what's the algorithm going to do, and why should it, and when should you expect it to happen? Think about what I just told you to think in terms of what narrative is. This is what you write in your notes. Narrative is the understanding of what the algorithm will do next, why it will do so, and when it will do it. When we had this consolidation in here, I drew your attention to the fair value gap here. I told you that the initial fair value gap on Monday, that was one of interest for me, and I told you I'd drag that out, much like a Sunday opening price. Just like I teach on an intraday daily basis, the opening price at midnight. You can utilize that for power 3 concepts. You're buying below it when you're bullish, selling short above it when you're bearish. It's a really nice filter. It doesn't mean you can't take shorts or longs that would not be in agreement with that idea. It just means that that's the best of the best. So let's go into those 3 questions here with this morning and kind of like solidify this as a lecture that you can be thankful that you were part of. The initial opening range I mentioned here, that was providing us initial resistance on the idea that we would see ES get in sync with what the NASDAQ was doing. Here's one of those if-then statements in logic. If the dollar goes lower, ES can go higher easily. However, if that doesn't occur, then we find that the dollar consolidates, which is what I said in the recording. Go back and listen to it. It can consolidate. Well, the dollar's been consolidating. Don't believe me? Let's take a look at it. Yes, we went up here, but it's inside that range high and that range low. So we're doing what? We're just going sideways. So a consolidating dollar is not equivalent to a lower dollar where we would expect higher prices in ES, but we would not want to go long in ES if this was raging higher and traded outside of its dealing range high. That's not what we want to see, but we haven't seen that yet. So it's all consolidation. If you go back in the recording, you can hear me right down here. I said, I don't want to see it turn here, because not that it can't go up here and treat that as a sell side imbalance, buy side efficiency, or a premium fair value gap to go short and expect lower prices. It's already done 3 stages. A low that went below this one over here. This low went below that one. Now this low was here. So if it starts to turn here, it's going to do what? It's going to trade back up into these areas here, where anybody just watching one ICT video, they're going to say, oh, this is a short. This is a bearish order block. It's not, because the narrative is stating that the dollar has already done 3 stages of runs on sell side. It's not technically a 3 drives pattern, but from a narrative stance, it's already taken 3 pools of liquidity for sell side. So what is it likely to do next? Consolidate or run for buy side? Where is it going to consolidate if it's going to consolidate? Here and here. What has it done? Consolidated. If it runs higher, where's the buy side? Right above here. Okay. Consolidation in a dollar is much like what I teach when I'm teaching forex. A dollar index can be consolidated, and when it is consolidating rather, what that does in forex, it allows the cross pairs, the non-dollar based currency pairs, to move, versus like when dollars moving freely higher or lower, that's directional for euro dollar, pound dollar, Aussie dollar. But if the dollar is held in consolidation, like we're seeing here, what happens is you'll end up seeing like euro pound will be permitted to trade wider than it normally would. So here's a euro dollar on a 5-minute chart. I know some of you are here just for ES, but trust me, this is teaching what you need to know. So here's the euro dollar. It's consolidating with the dollar. Pound dollar, much more animated. Even though it's sloppy and sideways, a lot more animation to the downside. What do you think is going to happen when we load up the euro pound currency pair? What direction would it be? And would it be stagnant price action? Would it be consolidating like we've seen euro and dollar? Or would it have a little bit more wider range or displacement? Oh, look at that. So euro dollar was consolidating while dollar was consolidating, and cable was decidedly lower, more animation to the downside, giving way to a firmer euro pound. So the trend is going to exist or materialize in this pair, because it's not rooted or founded on a dollar. So the allowance for the algorithm moves and shifts to this pair while they're holding dollar. Euro is heavily weighted with dollar, so it takes a lot for it to not be consolidating with it. But the times that it does break out, that would cause euro pound to drop. But it's consolidating with dollar while cable drops. Cable is pound dollar. So that is the equivalent to saying that this is going to go up as a trend. So you want to find big trending days or big trending model days in crosses that are not dollar based. I just taught you this. This is taught in the core content. Okay, this is ICT 101. Okay, and this stuff is gold. But now let's go back to ES. All right, so let's go back to the context where we were looking at all this in here. Now this is time distortion. Okay, all these candles is bouncing around in that little range like that. That's time distortion. The way you clean all that up, this high to that low. Why am I picking that high? It's an up close candle. Why am I not picking that one? That's an up close candle because this candle's high is higher than that one. It's also having a candle that's lower in its high to the left of it. So this makes this what? A swing high. So that high down to this bullish breaker, that passed through one time, that is your dealing range. Inside that dealing range, I don't care how much time it spends inside of it. I don't care. I'm waiting for something to occur. What was that? Does the support price going higher at the breaker? Yes. It goes back down one more time. Does it go outside that range? No. So the dealing range is not disrupted. It only went down there one more time. But inside that range, with all these candles, I am not worrying about this. Okay, I'm not impatient. You heard me. I'm waiting for the movement above that fair value gap inside of this dealing range. And it's in the premium side of that range. It's in the upper portion of it, upper half of it. I'm going to submit to time while it's doing all this chopping around until it does what I want to see it do, right back to that fair value gap. Once it trades above that and takes out these highs, at that time, all through here, I'm going to extend it a little bit further because this is where our range is. So dropping down to a 1 minute chart. So here's your dealing range. So inside of this high and inside of this low, I'm not concerned of how many candles it makes going sideways until we get above. When we get above, take out these highs here, what is that technically becoming? A shift in market structure. We've already shown 2 times where it worked off of that bullish breaker, that blue shaded area down here. And I told you that the candles that it needs to now deliver. Otherwise, it's not good. And it would probably go deeper than the bullish breaker. And my analysis would be incorrect. And I would just have to wait for something else to do. So I gave you all the parameters, everything. I told you what would nullify the idea. I told you what we were specifically waiting for, what the criteria was, where the accumulation would take place inside the bullish breaker and inside of the initial fair value gap on Monday. That's this green area. Does it accumulate in here? Yes. Does it send price above that fair value gap that I had on the 5 minute chart when I expected it to do it? Yes. It came in, opened, traded down into it again a little bit, and then rallied. Then created the fair value gap I drew your attention to real time right then and there. I said that if this candle here, I would like to see it trade down and give it an immediate rebalance because this would otherwise be a fair value gap. Right when that forms, what are you waiting for? What time of day are you waiting for in the morning session? Between 10 o'clock and 11. Folks, you can set your business hours to what I'm teaching. So in between 10 o'clock and 11, we're talking about 60 minutes, folks. Okay. What is the price going to do algorithmically next? What's the algorithm going to do next? Well, we were walking down here. I said, okay, we went down to that bullish breaker one more time. It should deliver above that fair value gap. I told you that. Within 2 candles, it should start running. So it should go higher and then start reaching for the buy side over here and into that 4138.75 level and in the high of the old new week opening gap. Why should it do it? That was the other question, because this is narrative. Okay. Well, because we've already went down to the low of that dealing range from that high to that low. We did not break it, and it's approaching what time? 10 o'clock. Okay. Inside of this vertical line and this side of this vertical line here, we have one portion of price action that keeps your focus dialed in. You don't care so much about what it did before. You're forced to look at what is it going to do in between these 2 lines. Because at 10 o'clock to 11 o'clock, that macro that runs, once there's an imbalance that's formed, I took your attention to it right there. I would rather have seen immediately this run here and then take off. That's what I wanted to see, because that's what I'm looking for in low resistance liquidity run signatures. That I love that pattern. I love it because it tells me it was going to go much higher than it has. But because it didn't, this is the part where you write down what I'm saying, folks. This is good. It's good stuff. Try not to say any bad words. I've been doing good since Passover, by the way. If it would have created an immediate rebalance, in other words, let me take this off. I'll put it back on in a second. If this candle, when we were talking about it live, I said I would like to see it trade down and touch that candle's high. That would be an immediate rebalance. If that occurred, we would be above 4180 because it created the fair value gap. In other words, it closed here and kept that low here and that candle's high here. That started the fair value gap. Then it becomes a simple silver bullet trade. Then you got to revert back to just, okay, where was your targets? And there it is. And be done. And be content with that for the morning session. That fair value gap is the fair value gap that forms once we had these highs taken out, once we traded above this fair value gap, that was the minimum threshold that has to trade above to act as what? Inversion, fair value gap. So there's a lot of things that Why ain't this a fair value gap? Because the narrative was we had to go above that older fair value gap here and trade above, which cancels out the premium idea on a short basis. Because if it can trade through that, what is it doing? It's disregarding. It's disrespecting what would otherwise be a selling area. And how many times did we trade up into that? Multiple times. So it's warning it out. It's telegraphing it to you that this is not an area to go short on. So what are we looking for? A run above here and above that fair value gap. Then rally between 10 o'clock and 11 o'clock. When, for narrative, when does this form? Between 10 o'clock and 11 o'clock. It can't be this as a fair value gap because it's below what we were requiring to be broken to the upside. So we can't look at that as a fair value gap. That's not even a fair value gap. It's a balanced price range. We have a fair value gap here, and we have one here. This is all balanced. So there's no need for it to go back down there. Fair value gap, silver bullet. The difference between it, if it would have been an immediate rebalance, there probably wouldn't have been a silver bullet trade for this indice, and then we would have been rocketing higher to 4180. But because we had a fair value gap formed traditionally, then it's just retrade down to it perfectly to this candle's high, to the tick, here, and off to the races it goes. But Michael, why didn't it go down here for these relative equal lows? Because it doesn't need to. It was going down here to pick up discount pricing. Goes above a premium array as we would expect. We don't look at this as a selling opportunity because it's already shown us what? It's not likely to do that. I said, we're waiting. What are we waiting for? Everything I outlined this morning. And then, boom, the little unicorn